Welcome everyone to today's Title Topics webinar. These are ALTA's free presentations that we offer every month on issues important to title professionals. I'm Jeremy Yowie, ALTA's Director of Communications, and today we will provide information about some of the certification options that are available and to help agents understand what to expect and help them select an option that may be appropriate for them. This is a timely webinar as ALTA's Board of Governors approved a motion in June encouraging members to conduct a best practice self-assessment by September 2014, and we will talk a little bit more about that during the presentation. We had nearly 1,000 people register for today's webinar, so definitely a topic that people want more information about. I need to touch on a few housekeeping items before we get into today's webinar. A copy of the presentation was emailed earlier today to all registrants. If you didn't get it, please send me an email at jyohe@alta.org, and that's jyohe@alta.org, and I will send you a copy after the webinar. All participant lines are muted for today's presentation. If at any time you have a question, please use the chat box function, and we will hold some time at the end to address questions. As an added benefit, I've had a lot of questions about this. Today's presentation is being recorded. After it's processed and edited, the recording will be available on ALTA's website at alta.org/title topics. Again, that's alta.org/title topics. I need to thank SoftPro for once again sponsoring our Title Topics webinars. Their support allows us to continue providing these educational opportunities free of charge. With that out of the way, let me introduce today's speakers. First, we have Matt Froning, who is the Chief Information Officer of Security Compliance Associates. Prior to joining SCA, Matt spent 22 years as the Chief of Computer Investigations and Operations for Air Force Office of Special Investigations. Next, we have Kim McConkey of the CPA firm Habif, Arogeti, and Wynne. He is partner in charge of the company's Compliance Success Program. Also joining us is Paranjothi, who leads the Business and Technology Risk Services practice for CBIZ and Meyer Hoffman McCann. All three speakers are from firms that provide compliance certification and will be able to provide some great insights into the process and what to expect. And rounding out our speakers, we also have Michelle Korsmo. She's Chief Executive Officer of the American Land Title Association. And during her time leading ALTA, Michelle has led the association to 4 consecutive years of record membership. So good things happening at ALTA. Michelle, with that out of the way, I'll turn the webinar over to you to get into the meat of the discussion.
Thank you, Jeremy, and thank you so much for talking about the good things that are happening at ALTA. I think that one of the reasons that there really are good things happening at ALTA is there is a lot going on in the marketplace for the title insurance and settlement industry right now, and your trade association really feels strongly that we need to be there to help people understand what's coming up in the next marketplace so that you can make better decisions about how to best position your business in that marketplace. And that's really a lot of what today's call is going to be about, which I think is going to be great. We've got a fantastic participation because of the interest in the topic. And the interest is really a lot about, the certification. What do I need to do? How do I need to get there? So as you can see from the slide, our agenda today, we're going to talk about what you need to do and how you need to get there from a lot of different angles. The tools that are available, really the importance of being proactive, what you can do to get your company ready, what's appropriate, what to expect, different case studies, which I know are always interesting to people to hear, real stories about people that have implemented the best practices and how that works, and then kind of the now what, which is always the first question I think I get every time I'm out speaking about best practices. But let me take a moment to talk a little bit with all of you about kind of where we're coming from and what perspective that we're looking at. Each of the speakers on our panel today is involved in best practices or best practice certification at some point, and so they can really talk through their perspective on kind of how they see the world from the angle that they're looking at. And of course, what we're trying to do at the Trade Association is really look at the big picture and figure out how we can watch the market develop and then guide our members as the market is developing. So ALTA, as you guys know, implemented the best practices in January of 2013. And since that time, it's really been a process of kind of educating the membership and the title and settlement industry, as well as really working more closely with lenders to talk about ALTA best practices as a tool for vendor management. There's so much pressure on the lending community right now from all of their regulators, specifically the Consumer Financial Protection Bureau, or as we call it, the CFPB, and then also the OCC, the Office of the Comptroller of the Currency. And the pressure from those two regulators on the lenders is really about making sure that they know what their vendors are doing and that their vendors have the ability and understand their requirements to be compliant with the law. The whole idea for the regulators is they're saying to the banks that, you know, even if you outsource and hire a third-party company to do something for you, and let's say that that thing is the settlement or the closing, you can't say, well, you know, I know they didn't follow the law, but that's not my problem. I hired them to do it. The banks are, or the lenders are, the regulators are saying to the banks and to the lenders that you're required to make sure that everybody's complying with the law, regardless of if you do it in-house or you outsource it. And that's really what's affecting this industry, because so much of the settlement part of the process, not the title insurance necessarily, but the settlement part of the process is a service that we are conducting on behalf of the lender. And so it gets a little complicated because, of course, that service is selected by the consumer, and that's really the way that we want it to be. It's the way that the policymakers want it to be. It's the way the regulators want it to be, is that the consumers are selecting. So the consumers are selecting, but the lenders still have this pressure point that they've got to have some type of knowledge base. So you've got the title and settlement industry, which is very different in the way it conducts its business, really depending on location. And that location can be difference in state rules and laws. It can be difference in the counties in which somebody's operating, and frankly, it can be just differences in areas within a state or within a county. So there's this real broad brush of how business is conducted. So how can lenders working on a large national scale, which many of them do, work with as many companies as possible without understanding the nuance of each of the particular areas? And that's where the best practices were designed to really provide that overview of what needs to happen. Okay, so we've got the best practices, but now what do we do and what's required of us? And that's really the question that we're looking at as we go into you know, really this stage of the marketplace. We have heard from some lenders that they are going to require best practices. We've seen a statement from Wells Fargo that says that they support the ALTA best practices, and you know, they're working through their process to determine how to implement that as a requirement in their systems. We've also heard from other lenders who have not yet been able to make public statements because of their approval process, but really are in support of the best practices and are looking at putting out statements that really talk about their desire to use companies that are compliant with the best practices. So how are you compliant? And this is something that the board and the best practices task force at ALTA spends a lot of time thinking about. How do we help our members get compliant, and then what does it really mean to be compliant? So if you look at the ALTA Best Practices website, you'll find a lot of the tools that the board has put out. And this June, the board decided that one thing they really needed to do was come out with a statement guiding their members on implementation of the best practices with a deadline. It's an interesting back and forth because the lenders want to use best practices if they know that there are companies all around the country that have embraced this and have operationalized it, so they've got the distribution network necessary to do the best practices. Yet, as an industry, many of us think about the fact that are we going to approve and implement all of these things, many of which cost significant money if we don't know that this is going to be what's required of us. So it's a little bit of a back and forth. And that's where the board really wanted to come out and say that they encourage all of their members to conduct a self-assessment of their adoption of the best practices and to implement the best practices by September. You may notice there isn't a date in September because it's not it's not a set date where somebody is going to say after this date, the board certainly has no authority, nor does the association, to do this, but really giving people a touchstone. If we're ready in September, we're going to be ready for what comes ahead. And when you think about what's going to happen in the next now 11 months, we've got all of the preparation for the new mortgage disclosure forms and all of the transition and implementation that's required with that, that really being ahead of the curve with the best practices is going to be the best for people's business. So in order to help people do that, ALTA has been publishing a series of self-assessment readiness guides. And these compliance guides go by each of the 7 pillars and will walk you through the questions that you need to answer to determine your compliance with the best practices. The idea then is that what you develop from the compliance guides can be pulled together in a packet that is essentially your, in many ways, kind of self-certification or self-reporting of your compliance program back out to the interested stakeholders. So what you do with that packet is really kind of the next question, and that's what we're going to explore on this topic in this webinar. And I think that's really where people are wondering, do I go out and I get an outside assessment? Do I do something internally? And that really varies on your business and the type of business that you're conducting. I think many people have seen questionnaires come back from lenders that they work with where they're asking them a series of questions, many of which closely mirror the best practices, and they're wanting to know if you have policies and procedures that support these different areas of compliance. In many cases, sending them back a compliance package that you have satisfied those lenders' needs. And so this packet that you can develop, this compliance program that you can develop through the compliance guides that ALTA has been creating, really should give you a tool to respond to those lenders. There are some out there that have much tighter relationships with lenders where the lenders are actually requiring them to have on-site audits conducted. For those companies that are in that world, you probably know a lot more about all of the requirements within your lender relationship, but I think that that really serves as a good guide for everybody that doesn't have maybe that closely or contracted a business relationship with the lender as far as what's to come. And there are a number of companies that look at best practices as a strong marketing tool for them. They know that they're implementing the best practices in their shop, and they really want to go out and market that. And so they're working to get ahead of the curve and seek an outside third party to conduct an assessment of their company and then issue that third party certification as to the compliance within their best practices. So before I turn it over to Kim, who will talk about this next aspect of why we need to do this, I do want to take a moment just to answer that question that everybody's going to have, which is, how do I know what's going to be required of us and what is going to be required? The answer is we don't know at this point in time because everybody's trying to figure this out. And I would encourage people to think about it in terms of the more compliant the industry is as far as its behavior and its response to the best practices, the better position we are in to have more flexibility in the marketplace. The less compliant, the less the industry responds as far as seeing this need in the marketplace and taking a proactive step to define their compliance with best practices and therefore compliance with consumer financial laws, the less we're doing that, the more likely we're going to have strict requirements put on the industry. So the more people behave in a compliant manner, it actually helps the industry have more options when it comes to how you show that compliance. But up and until those things are decided, and it's really a question of risk for many of the lenders that are looking at this process, we really have to make judgment calls. And that's where the board felt strongly to encourage its members to implement best practices and complete the assessment readiness guide so that they are prepared not only to answer the questionnaires but to have on-site audits. when they come to town. So with that, I'd like to turn it over to Kim to start talking about some of the nuts and bolts about why we need to do this. Kim?
Michelle, thank you. So why should I act now and get ALTA best practices compliant and certified? All you guys have heard for the last year is that you need to get compliant with ALTA best practices so that you meet your regulatory requirements. So why is this necessary? What are my business risks if I do not? Your industry right now is at a crossroads in deciding whether you want to try and regulate yourselves or have Washington regulate you. In the 1990s, Washington wanted to regulate my industry, the CPA industry, but our governing body, the AICPA, chose that we would regulate ourselves because the last thing we wanted was for Washington to be camped out on a doorstep policing us. So like the AICPA, as Michelle was saying, ALTA stepped in to the forefront a year ago and developed a framework for title agents to use to demonstrate compliance. And Wells Fargo and the CFPB have both been in support of ALTA's efforts. And if you cannot show your lender client that you are compliant with federal consumer financial laws, you're at risk of losing business and client relationships. In April 2012, the CFPB issued a bulletin that required mortgage bankers to monitor their third-party service providers' compliance with federal consumer financial laws or face possible fines or other enforcement action if they or their closing professionals that they work with are not compliant. So mortgage bankers will only want to conduct business with compliant third parties to mitigate their own business risk. So we believe to be successful in your industry in the future, you need to retain and grow your existing banking relationships and develop new ones. And to achieve this goal, each title agent must stay ahead of its competition by getting started and commit to completing a compliance certification program today. Raj, do you want to speak how to prepare?
Yeah. Hey, thanks, Kim, for leading it off. So what to do next is always the question that I've been hearing. And the first thing you need to do, and Michelle and Kim have already touched on this, is speak with your clients. Talk to the lenders. Understand what they're needing from you. Make sure that there's no barrier of entry to continue your work relationship with them. Understand their needs, understand the requirements, understand what they want, what type of certification would they require, whether they'll accept a self-assessment, whether they'll accept a third party to come on site and do an attestation or a SOC report or SOC report that we'll be discussing later. These are the things you need to understand from your clients, and it's really going to be client driven, so you really need to understand their needs. Next thing is to take the assessment, self-assessment yourself. As Jeremy alluded to, the self-assessment is out there. You can take it. You can kind of see where you're at gap-wise, understand what you need to do, whether it's documentation of policies and procedures. And honestly, when we go and talk to different clients, it's all about documentation is always the biggest need and gap we see. A lot of the times you're following the practices, it's just retaining documentation and policies and procedures and proving that you actually follow it. And that's the biggest thing that we always see. Once you self-assess, make sure you can remediate any deficiencies or gaps or findings you may have, especially before you ask a third party to come on site and actually certify you or provide the test work. One thing you also can do if you decide to work with the third party is to have them help you with the readiness assessment or gap analysis before they would actually certify you. So there's ways to work with other parties to help you get there. If you identify a gap that you don't know what to do next and you need help documenting this, or you don't know what to do, there's certainly people out there that can assist with that. Also, the assessment period is very key. Kind of going back to your lender clients, another thing to ask them is when you need to be compliant. Is it something you need to have before the end of the year? Is it something they can wait on until next year? It's really driven by them. So you really need to understand what their requirements are, and usually as long as you can show that you're in the process of achieving this, usually you can pass it on, and they'll usually accept that and work with you going forward. The next thing we'll be talking about is what level of certification you need to provide to your client, and Kim is going to kick that off for us. So.
Raj, thanks. I would also want to emphasize what Raj just said. It's just so important that you assess your current level of readiness to undergo compliance testing. And if you have any deficiencies, you need, whether yourself or get third-party help, start coming up with a plan to remediate those deficiencies, because you do not want to start compliance testing unless you know, and whoever's doing the certification testing, that you are compliant. Because once you start testing for compliance and find additional deficiencies, that will only delay your getting that certification report to the bank later versus sooner, and cause you needless internal cost and additional professional fees on the compliance testing. So it's very, very important that you are proactive. Now, from a CPA standpoint, there, like Michelle was saying, that there's, I don't know if confusion's the right word, but there's not clarity right now about what the banks and the CFPB are going to require so that agents can demonstrate that they are compliant with federal consumer financial laws. With that being said, I still would recommend that you reach out to your lender clients and see if they'll tell you at least what they will not accept. For CPAs, there's two levels of reports that we can issue, one being a review and the other being an examination. Now, review gives the user, your lender client, the least level of assurance, but an examination will give you the highest level of assurance. The difference is there's much more work involved with an examination report. So what's really the difference between an attestation report and a certification report? There's not a difference. A CPA has to, we cannot give out a certification report. We have to give out an attestation report, and that report has to be in accordance with our professional standards, which gives the bank that's using that report more assurance about you being in compliance. Now, right now what is being discussed is there's tiered reporting based on closings, offices, escrow accounts, and personnel. And many of you may fall into the lower tier or the small agent tier. And you're probably asking yourself, why do I have to go through the more rigorous and costly reporting requirements that a larger title agent has to go through? And I know the underwriters are very concerned about there being a less onerous and cost-effective compliance reporting option for the smaller agents. So the review report that I mentioned earlier is that cost-effective option. And then you ask, why do you need a CPA to do this? Why can't I just hand them my own self-assessment? Well, banks are always looking to mitigate their risk. For example, when you provide financial statements to your bank, as a general rule, they will require a CPA's report. Getting this level of assurance from someone who is independent and objective mitigates their business risk. And we believe the banks are going to require the same assurance for non-financial information, such as an ALTA best practices certification. So for the smaller agent, it's much more cost effective. There are less procedures that are performed, but there's would be enough assurance for the bank to accept that type report from a small agent. So medium and large agents, what are the options available for them? An examination report. Examination report, like I said before, it gives the bank more assurance because it's more akin to an audit. There's larger sample sizes and there's risk assessment. So as Michelle said before, the CFPB and Wells Fargo support what ALTA is doing for establishing this benchmark. And what these reports do, they measure your compliance against that benchmark. And in fact, First American is encouraging its agents to adopt best practices, and it's advocating for HAW and other CPA firms on it, and is advocating for HAW on its website with their reps, internal website, and at industry events to perform that compliance certification testing. Raj, you want to go through the SOC reporting?
Yeah, thanks, Kim. So Kim was describing one way you can disclose you follow best practices, and I'm going to talk about another method as well, and that's the Service Organization Controls Report, or SOC report, or SOC report. And some of you may have seen these, some of you may have heard of these before. They've been out a few years now. It used to be called SAS 70. The name changed about 3 years ago. And the good thing about SOC reports is that financial institutions, lenders, banks, etc., have been accepting these reports from their third-party vendors for quite a long time now. And so they are easily recognizable by them. They understand them, they know them, they require them. So that is one advantage to them if you decide to go down this path. I'm just going to briefly describe the differences between the various reports, try to get not too detailed and into it, but I really wanted to give you a high-level overview of what they are. So there are two different SOC reports I'm going to talk about, a SOC 1 and a SOC 2. The SOC 1, which kind of follows the old SAS 70 report, if any of you have seen one, assesses controls at a service organization that are relevant to their clients' internal control over financial reporting. So basically, in a nutshell, it's providing comfort to your clients that you have a effective internal control environment for the services you're offering to them. That's basically what it is. The SOC 2, which came into place just a few years ago, is not necessarily over financial reporting impact per se, but over security, availability, confidentiality, privacy, etc. SOC 2s are starting to become quite a bit more popular lately, just because of the industry. It all depends on the industry you're in. I'll give you an example. A SOC 2 is really prevalent in the cloud computing space if you're hosting data for a client per se. And if you look at the SOC 2 security, availability, confidentiality, it all kind of makes sense that a cloud provider would go for a SOC 2. Most of what we have been seeing for title companies is more of a SOC 1, and since it tends to be more effective for their clients. And as I mentioned earlier, it's all going to be kind of client-driven on whether a SOC report makes sense for you or an attestation that Kim was describing earlier. Kind of going below, we described Type 1 and Type 2, and Type 1 and Type 2 falls under both the SOC 1 and SOC 2. And the main difference is that a Type 1 is at a point in time. So all we would be attesting to as a CPA firm is that you had these procedures, controls, etc. in place on that specific date and that is it. And in the slide, you can see we put August 31st as an example. So all we'd be attesting to is that you had these controls in place on that date. And usually clients do this only initially to get their feet wet. The ultimate goal is to get to a Type 2 report, and you see that below, is that's across a period of time, usually 12 months. So basically, the Type 2 report is what you want to get to because it covers the whole calendar year. And so your clients have comfort that you had proper controls in place, proper procedures in place, and it was all documented and tested by a CPA firm that they were operating effectively, designed, etc. And so your clients have comfort that someone looked at it, it's working properly, etc., and that they'll continue to continue business with you. So, and I know there's probably a lot of details in there. If you have questions on it, please feel free to ask me later or just ask Jeremy later at the end. I think Kim is up next.
Raj, thanks.
Yep.
So what to expect when you actually go through one of these engagements? For a review and examination engagement, the time frame is very manageable, and it's planned to run as efficiently as possible. To expedite that, we're going to sit down and we're going to meet with you and plan the engagement, including the timing, requesting of documents, client assistance, and extent of the on-site and off-site work. And as part of that planning, we want to understand your processes so that we can better leverage our work to be as efficient as possible with minimal disruption to your employees. We don't want you to have any surprises. We want you to know what to expect. From planning to issuance of the compliance report, field work could take as many from a few days to a couple of weeks, depending on the type, whether it's a review report or examination report, and how large the title agent is when you perform the examination procedures. Approximately 5 to 10% of the field work for an examination engagement will need to be conducted on site. The remaining compliance testing will be conducted electronically. We do that over a secure network portal or using your encryption software, and that causes minimal interruption of daily business for your agency. And then as far as pulling the requested documents to perform the compliance testing work, it really, by the time you've gotten to this point, you're compliant. You're like Raj said, that you're documenting. Not only do you have written policies and procedures, you're documenting what you're doing. So it shouldn't take any more than 1 to 3 days for 1 to 2 people to pull that information. Now, there will be, while the work is being performed, there will be follow-up questions. But if you're that organized at that point, which you should be, it may take an hour or 2 at the most for one person. So it's not onerous. The process is not onerous. Raj, do you want to talk about as far on the SOC testing side? What to expect?
Absolutely. So similar to Kim, there'll be some overlap here. The first thing we always do in a SOC engagement is a readiness review or gap analysis, and that's where we come on site for a couple of days, usually 2 to 3 days, depends on timing and everything. We sit with a couple of your folks, one that understands the operations and one that understands the IT environment, and what you would get after that are two things. One, you would get a list of fixes or recommendations of, here's the list of things you need to fix before we come back and actually test. And then we actually draft the report for you. A SOC report is usually anywhere from 30 to 50 pages long. So we'll draft that for you and give that to you a couple weeks after we leave off-site. Once the biggest thing on your side would be the fixes, the gap analysis. it can take a week, it could take weeks, it could take a month. It just depends on kind of where you're at in the process. Once you you would tell your CPA firm, hey, we fixed all of this, we're ready to go. You would communicate that to them, and they would schedule a time to come on site. Usually, again, if it's a type 1 report, you'd be on site for a couple of days to test everything that you would need to test for the report. Now, the good thing is that a couple of weeks before we would show up to test, we would send a request list of everything that we would need to document, to test, to see, etc., while we're on site. And so there should be no surprises, as Kim kind of said earlier. There should be no surprises. You should know everything that you would need to do to comply. And so when we come on site, either you would give us the documentation on site, or you would upload it to a secure FTP site for us to take a look at before. So the interruption of your work should be very minimal, if anything. There should be a few questions while we're on site talking to a couple of the key folks and understand the process in the IT environment, and there could be some follow-up afterwards. But it's not too bad, actually. And then once we would leave the field, there would be some interaction about drafting the report, but it should be about 4 weeks or so before you would see a final report in your hand that you could finalize and give to your clients going forward. I think Matt is going to talk next.
Yeah, thanks, Raj and Kim. And just to give you guys a little bit more insight from the Pillar 3 perspective, and a little bit of what to expect when that starts to occur, is when we go out there and we start to engage, or you engage with another company for Pillar 3, you should expect a initial call that kind of gives you those expectations and lays them out. What to expect when the on-site assessment comes about, some of the things that an engineer may need when they're on site, such as your information security policy or acceptable use policy, your disaster recovery plan. And then, looking at the people that they're going to want to interview, your IT staff, maybe someone in the management team, and then answer any other questions that come about during that. And then once it's actually on the on-site assessment, a lot of the things that we look at are not just from the technical side on the vulnerability scans and stuff like that. We actually will look at the physical and administrative side, going back to those policies and ensuring everything aligns with those Pillar 3 expectations. So, and then from the standpoint of what we're finding out there right now, is there is a lot of confusion at the time. Right now, the guidance gives unclear parameters. We have title agents out there just wondering how this is all going to play out. There's no standards for safe and secure handling of data that's been put out across the board. So once again, that's varying quite a bit from small agencies to large agencies. And that's going to continue to be that way. The key in that aspect is protecting the data based on the environment that you have. Every environment is not going to be the same. So ensuring you have somebody coming out there to review this and do your assessments in a manner that's specific to your individual environments. We have you see a wait-and-see group out there. These are a lot of the people that are looking for some regulatory clarity. When's this going to be a requirement? When are you going to see regulators and enforcement bodies coming out and enforcing these standards? Being on the panel with the FTC not too long ago, I don't see that coming very soon. I don't see that regulatory clarity coming that quickly. So it's up to the industry right now to kind of take it by the foothold and take advantage of it, instead of, as they pointed out earlier, having Washington come down and regulate everything. It's that opportunity for the industry to take that advantage before they do bring it down. Another part of the wait and see group is, they're wondering what the lenders are going to do. Well, with lender liability on the actions of their service providers, they're going to start requiring that compliance attestation. You're going to have to start looking at these ALTA best practices and being compliant with the regulations that are out there. There have been some early adopters that have come out and started trying to become compliant with the best practices. And it's been difficult. Pillar 3 is one of the most difficult aspects to self-attest to, because there's so much on the technical side. If you look at it, you can see that the questionnaire is quite large, and there's a lot of components within that. So it makes it a lot more difficult to self-attest to. You're having to pull in those third parties to come out and do those attestations for you and ensure that you're becoming compliant with those best practices. One of the other areas is the common deficiencies. What are the common deficiencies? Having been out to numerous title agencies so far, we've gotten a pretty good idea that they're just not prepared for Pillar 3 at this point. They're getting there, they're trying to get there, but we are seeing some common deficiencies that go along with that. One of the top ones is, just from the technical side, you're looking at a lack of antivirus on your systems. A basic, security protection mechanism such as antivirus is an important part of it. Or if they do have it, a lot of times we're seeing that it's disabled because individual users are complaining that their system's running slow because antivirus is running in the background. So not having that, not having a firewall in place to protect that data as well is another area that we're seeing deficiencies in. And then from the administrative side of the house, a lot of agents are lacking policies in place. They don't have information security policies in place. They don't have a disaster recovery plan in place. And these are steps that you can easily take care of and start closing those gaps and moving towards compliance with Pillar 3. From the physical side, because Pillar 3 does cover the physical as well, it's an important part of your overall security, because no matter how much technical guards you have in place, if your physical security allows access, then you're vulnerable from that aspect as well. And you'll see a lot of the companies don't have any separation between their public and private area, non-public areas, so individuals can walk in and out. One of the things that we do is we actually do a physical assessment of each one of those locations, and I've been able to walk into the company, walk straight to the back, grab some non-public personal information off of a desk, and walk back out of there as a test of their physical security. So there are a lot of different aspects that go along with that. And I'm sure Raj and Kim have some common deficiency areas that they would like to discuss. I know we're cutting close on time, and we'd like to be able to allow for some questions and answers. So I'll turn it over to them for some of the common deficiencies that they're finding.
Okay, Matt, thank you. The Pillar 3, like Matt said, I mean, that is the most difficult and complex area. But oddly enough, as we get back, we ask our class to take an initial assessment review, which is similar to self-assessment, but we give them back a gap analysis report and tell them, what they need to do as far as remediation. I got beeped. I guess I'm going over. We provide that to them so that they can start, they know what they need to do, okay? And most importantly, they're proactive in getting compliant. And the one area that besides Pillar 3, oddly enough, is Pillar 7, the complaint pillar, where you just simply need to log in those complaints, document how you're following up on them, and document what the resolution is. That can simply be done in an Excel spreadsheet. But it seems like when we get our initial assessment reviews back that everybody's checking, well, a lot of people are checking no to that. So one of the easiest things can be taken care of so easily. Raj, do you have any comments?
Yeah, Kim, I think just kind of adding on to what Kim and Matt said, the biggest thing we see is documentation, whether it's policies, procedures, and then actually following them and maintaining evidence for that. Those are the biggest things we see, and once you can kind of get that down, it should become fairly natural for everybody. The first year's, once you start adopting these things, it's always going to be the toughest, but year after year it should just be pretty standard and part of your everyday process going forward. So that's the biggest thing we see. So so the next thing is you've passed, and what do you do now? And the biggest thing is to get your certifications, get your reports to your clients, and let them know that you've gone through this, that you're compliant, that you've passed, and they can continue to do normal business with you. One thing that we always stress to our clients is use it as a marketing tool. It's a way for you to not only continue business with your current clients, but to pick up new business. It may be an advantage over other title companies that you may have, and so I would leverage that. We have clients that do press releases on their website telling them they've gone through this assessment or certification. So there are things you can do to use this to your advantage, to not just look at it as an expense, but because I know that's the hardest part, but using it as a way to get more business as well, and then you can negate that expense going forward. Now, how effective are how long do these reports kind of keep you compliant? And I'll speak from a SOC reports perspective, and then Kim will chime in on the attestations he's been doing. A SOC report I'd mentioned is a Type 2 report covers a period of time, usually a full calendar year. Those are usually annual reports. So your clients will be looking for a report from you on an annual basis. And if you're talking with your lender clients and they're big, like Wells Fargo, Bank of America, et cetera, they know what these reports are, and they understand that they're an annual process. So it is an annual investment that you have to make, and that can be can be expensive, and you have to budget for it. But it is an annual thing you have to do, and provide that report to your clients on every year, so they know you're compliant and that you continue to work with them. So I'll let Kim talk about attestations.
So now you've got the Holy Grail, what everybody's looking for. You need to make your lender aware, that you've taken these strides to meet regulatory standards and that you're taking regulatory compliance seriously. Go out and be proactive with it. Like Raj said, take it to the banks that you have relationships. Take it to the new ones. Try to grow that business. Now, as far as the length of effective date of that certification report, it's ALTA is proposing a 24-month reporting cycle. It's just a matter of, the banks and CFPB need to give more clarity on it. But just keep in mind the most important thing to remember is you spend a considerable amount of time and resources in getting to this point, and you need to keep that up every day to continue to maintain that level of compliance. Jeremy?
Yeah, and this is Matt, and I definitely agree with you guys. One of the things that a lot of the agents out there in this industry are finding is they are behind, especially in the Pillar 3 area from the technical side, and they are playing catch-up. And it's a long, difficult process for some of them if they haven't taken steps in the past. So once you do catch up, it is important to remain caught up with that and continue to be proactive with that throughout the life cycle, not just for that one short period. Otherwise, you're going to find yourself falling behind again and trying to play catch up.
Right. Okay. Thanks, Matt, and thanks, Kim and Raj. We are coming up to the top of the hour, but we definitely want to address some of your questions and give some feedback. So if we go a little past the top of the hour, just hang out with us for a little bit, be my guest. As a reminder, if you have any questions, please use the chat box function. We'll kind of just be a firing squad here, and I'll just rattle off some questions that have came in, guys, if you want to tackle them. Real quick, though, some people had some questions on where to get some information about best practices. You can find information about the pillars on ALTA's website, alta.org/best practices. You can also access the self-assessments. We've provided the guides for all of the pillars except for 2 and 3 so far. You do have to be an ALTA member to download the self-assessment, however. And guys, before we get into this, I mean, we've had I've probably seen 30 questions about cost and expense. I would suggest everyone on the call, if you're curious about what's going to cost your company, reach out to one of these guys, get a ballpark. And you guys want to add any color onto, ballpark estimates on what agents can expect?
Well, this is Matt, and I'll just say ours is going to vary, and it's going to be based on the size and complexity of your environment. So what we do is we sit down and we talk to you. We get an understanding of what your environment looks like before coming up with the cost, because everyone is going to be different from that aspect. Yeah.
This is Kim. Our initial assessment review, we charge $1,000 for it, but if you're a first American agent, we give it out for $750. The reviews are approximately $3,000. The examinations are basically $10,000 above, depending on the amount of work.
Okay. And this, Raj, it just kind of depends on, kind of like Matt said in our scenario, it depends on how big you are and how complex your environment is and documentation, etc. So it just kind of depends on your situation.
Mm-hmm. Hey, Raj, any recommendation for when people should get started on this certification or attestation process?
Yeah, the sooner the better. It's the easiest answer, and just because you obviously will know better where you're at in this process at the initially than us, and so I mean if you're far behind, then you need to really get going. You don't. I hear a lot of, well, our bank isn't asking for this yet, and the biggest thing in that statement is yet, and so you don't want to be behind when they do ask for it. So I would say if you have time to do it, go ahead and get started. So.
Good. Any other additional comments from Matt or Kim? I think Raj pretty much summed it up.
Yeah, I think he did. I mean, you really need to be proactive, and you need to go ahead and get compliant so that you're at that point. You just can't turn a light switch on and you're compliant. So you need to start that process and get to that point. And so when you're ready to be an early adopter, or when clarity comes out, you're ready and you're not 6 months behind everybody else.
So if you have someone on the call, they're ready to reach out to a company. How do they find a CPA that can do this, or a company that would do this? One of the main questions that are coming in is, will ALTA provide a list of vendors? And Michelle, I'm not sure if you're still on the call, but do you want to touch on that? If people can expect ALTA to be providing a list?
Sure. Yeah, that's always the how do I find it. So ALTA is developing our elite provider program that should have a large number of different service providers coming online within the next year. Up until that time, I think you'll find that the underwriters have really also developed a great list of resources for agents. So if anybody's really looking for a vendor list, you can contact us, contact your agency manager with your underwriter, and we will continue to add to those sites.
And Michelle, correct me if I'm wrong, but one of the requirements for the Elite Provider Program is that they would provide discount rates to ALTA members?
Yes, not only will they provide discount rates to ALTA members, but they have to have a significant number of positive endorsements from ALTA members. I'm trying to remember, Jeremy, is it 20, 25 people that actually support and say positive things about their products, so that we know that it's someone that our members support. So if we're recommending someone as an elite provider, they have a broad base of support within the industry.
Mm-hmm. I'm not sure the exact number right now. I'd have to go to this webpage.
I think it's 20, 25.
Yeah.
Somewhere there.
And just a question popped in. It kind of struck me, and the question surrounded is ALTA requiring the services to be provided by a CPA firm. And Michelle, you might want to take this one as well. And these aren't requirements coming from ALTA, correct?
Right. So the best practices are something that's produced by ALTA but not required by ALTA. The requirement for best practices is really going to come from the lenders. And so it's the question of what the lenders are looking at as far as how they want to see a compliance with best practices. And it's up to the lenders, because it's really the risk that they have to manage from an enforcement standpoint with the different regulators. So what ALTA is doing is trying to provide our members with information on kind of what's happening in the marketplace and how they can best be prepared.
Right. Raj, earlier you were talking about a test list, I believe, and so we had a couple of questions of maybe you could explain what's on the test list, or is there a test list you could provide if people followed up with you, or could you walk through what is a test list?
I'm sorry. Say the question again, Jeremy. I'm sorry.
I think it was when you were speaking about a test list.
A test list. Oh, document list. Document
list. I apologize.
Okay. So what I was saying is a request list is basically a document request list. We'll send out 2 to 3 weeks before we would come test, and say, hey, here are the things we need to see, whether it's screenshot of this or evidence of this policy, evidence of this procedure. So when we do come on site, there are no surprises, and at the same time, we don't take as much time from your folks. And so that's really the purpose behind the request list, is to kind of do that ahead of time so we don't waste anybody's time when we're on site.
Okay. Some of the attendees have been wondering if you guys have been hearing from lenders as far as, what kind of questions or things they're expecting from their settlement agents. Any color commentary that you guys could add is what you're hearing from the lending community?
One of the big things I'm hearing is that they are going to really look at the third-party providers that they use, and they're going to seriously look at that list, and from a business risk standpoint, they're going to assess whether they are going to do business with first the number that they're doing, and then plus they want whoever they do business with to be in compliance with federal consumer financial laws, because you're a business risk for them if you're not.
And I'll add on this, Raj. We do a lot of internal audit work for banks, and so we've seen it from their side, and all of them have a third-party due diligence assessment, and they do them manually, and depending on the services you're providing to them. But and it's a checklist, and really, these are the things you got to have to be in partnership with them, and compliance of your procedures, controls, practices is always going to be key. And so this thing isn't going away for title companies or any other vendor of the financial institutions. And so and when we go and do internal audit work for these banks, it's something we always look at is, okay, did you add a new vendor? Okay, show us the due diligence you did on them, as well as your due diligence on an ongoing basis, on an annual basis, to make sure that they're still following proper procedures. So it's not going away, I don't think.
I think one thing that we're seeing from the lender's perspective is they want to see that companies they're working with are meeting requirements that they may be required to meet, such as the Graham-Leach-Bliley Act, and meeting the requirements that within that, and having those gap analysis done from the technical side.
And are you guys seeing, in addition to title companies, escrow companies, law firms, is there activity among those groups as well, looking to get into compliance?
Yes, we have started seeing that as well, along with real estate.
The reason why I asked, there have been a few questions coming in asking, do the best practices apply to me? I'm an attorney. Do the best practices apply to me? I'm an escrow agent out in California. And so I think if you're working with a lender and you're handling funds, you're handling NPI, the answer is yes, correct?
That's correct.
Yeah, that's my understanding too.
How about if say Pillar 3 has a lot to it, there's a lot of meat there, but a company doesn't do all of the functions that are under Pillar 3, how would that impact their certification?
Well, like I had said earlier, each individual client is going to be different. If you're a 3 or 4 person shop compared to a 150 person shop, you're not going to have the same exact implementation. So it's going to be varied on what's required of you and how you're handling those risks that are associated with doing business and how you're protecting that data. So one of the things we do is we look at each one of those individual clients separately, and we work with them to understand their environment and how they're working with it, so that they are not trying to match up with that 150 person shop when spending a ton of money on equipment and systems that may not be necessary for their small environment.
Any other comments, Kim, Raj?
I would add that Pillar 3 is definitely the more challenging pillar. And I would reiterate what Matt's saying, that you've got to look at it from a cost-benefit standpoint and what's practical. If I'm a small shop, I certainly can't have all the bells and whistles that a larger one has, but I should have other mitigating controls that help me get there. So it's not a cut and dried answer. It's just you've got to look at the circumstances.
Okay.
Adding on to Kim, what he said is right. I mean, if you have some mitigating controls that you could satisfy and put in place, it just depends on each person's situation and environment. So.
And had a few questions come in about how you decide if you're a small agent, and this probably isn't a cut and dry answer at all, but do you guys have a system on how you decide if it's a large agent, small agent, and where a company may fall?
For us, it's really a combination of things. It's the number of employees you're looking at, how many locations you have, what types of systems you have in place. A lot of it comes into play. It's not a cut and dry, 50 agents is now a large organization, or 100 or 150. It is really about your overall environment, because when you're looking at it from that perspective, you could have a smaller agency that has 20 full-time workers, but has a larger environment because they do certain things. They team up with other organizations, and they have a much greater scope that you have to do the assessment on. So again, anybody that you work with, you really want to have them focus in on you individually, and not just have a flat, square that says you fit into this box. You need to look at those environments and make sure they're looking at you individually to get the best service.
Right. I think a company can probably find an answer when they talk with their lender clients, because the lenders, when they're evaluating their risk, a 10-person shop they may do a lot of business with that 10-person shop, so in that lender's mind, they might be a lot more risk with that company, but they may do a little bit of business with a larger company, but not have as much risk because they just don't do as much business. Any other comments from the speakers, maybe just to wrap up today's conversation?
Yeah, I just would reiterate, I know I've probably said it several times, but please go ahead and start on the road to getting compliant and starting your compliance certification. There's a lot of unknowns out there, so but sticking your head in the sand is not the right answer either.
Yeah, this is Michelle. I think that's right, Kim. And the other thing that I think is important for people to do is to sit down and talk with their lenders. And when you do go in and sit down and talk with your lenders, you're probably going to get some blank stares or some furrowed brows because they may not be sure what you're talking about, depending on kind of where they are within their corporate structure. But I will tell you that at some point in time, they are going to get a message and a directive from their legal compliance department that says, you need to make sure that your settlement companies are compliant with consumer financial law. And it's always great to have those people that are your business partners be able to see those messages and think automatically, I know my settlement providers are worried about this. This is great. I'm going to go right to them because I know that they've got a solution for me. So I think you're in the driver's seat to be able to answer those questions, even if you are getting blank stares, if you go and have those conversations now.
All right, thank you, Michelle. If we didn't get to your question, please feel free to reach out to any of the speakers. Reach out to us at ALTA. We'd be more than happy to talk with you. Again, more information on best practices on our website. The address is there on the screen. If you missed parts of today's webinar or think others in your office would benefit from listening, again, today's webinar was recorded and will be available for replay early next week on the ALTA website, alta.org/title topics. Looking ahead, our next webinar will be on September 18th, as RESPA attorney Phil Schulman will be addressing marketing agreements. So keep an eye out for information about that webinar. And also, if you have any webinar topics you think we should be considering, please send me your suggestions at jyohe@alta.org. Again, that's jyohe@alta.org. And that will bring us to the conclusion of today's presentation. Thank you, speakers, for sharing your insight into best practice certification and attestation. We hope all the listeners found the presentation useful, and take care, everyone.
Thanks, Jeremy.